Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account. Right now, the net asset of my account is 72,771.5. Today's PL is a loss of $233.99, which is a loss of 0.32%. And right now, the total position in my account is a loss of $1,626.39. Today, United Natural Gas closed down of 3.76% to 6.91, which is a loss of 3.76%, close to 4%, and SQQQ made a gain of 2.8% to 20.16. And let's take a look at the market today. The market generally closed lower. Dow Jones Industrial Average closed down 0.75%. Nasdaq Composite closed down 0.96%, and the S&P 500 closed down 0.85%. Today, we can see that the auto manufacturers in particular closed down 5.81% due to the recent Q3 financial report released in Tesla, and which has some unpromising results. Biotech closed down 2.23%. And asset management also closed down 2.14%. Today, the headline is Tesla, which has made a loss of 9.3% to $220.11. And we're going to be talking about the S&P 500 companies' financial reports and the bond market. The yield on the 10-year Treasury note approached 5%, with Nasdaq down about 1%. The yield on the 10-year Treasury note rose to a multi-year high of 4.996%. The market generally monitor the third quarter earnings and development in the Middle Eastern geopolitical conflicts. The U.S. jobless claims data show the labor market remained tight. Federal Chairman Jerome Powell also released some of its speeches, saying that the FOMC will be cautious and may need to show economic growth to address excess inflation. And the Treasury prices rose as high as 4.996%, close to 5%. The last time the yield broke above 5% was 2007. And the yield on the 2-year Treasury bond, which is closely linked to the U.S. federal funds rate outlook, and climbed up to 5.2442%, a 17-year high, as recent economic data exacerbated concern about higher long-term interest rates. In a key speech at the New York Economic Club at midday on Thursday, Fed Chairman Jerome Powell suggested that the Fed would hold fire against its next meeting, but said the policymakers could raise rates again if there are further signs of economic growth. He said that the Fed is playing cautiously, given many uncertainties and risk factors, and the progress we have made on the board. Like recent officials, Powell noted that there were some cautious responses to the high interest rate that have been maintained high since the summer, and the recent bounce back of consumer price index, which has been rising since 3.0% to 3.7%. Mr. Powell cited tightened financial conditions due to higher long-term Treasury yields, saying that continued changes in financial conditions could have an impact on the path of monetary policy, saying that the higher interest rates in the Treasury notes may really reduce the economic activities in the U.S., and this may help to bring down the inflation, which reduce the need for the Federal Reserve to lower its own federal funds rates further, to raise its federal funds rates further. A growing number of economists believe that the Fed will leave interest rates unchanged at its November 1st meeting and will not cut rates until second half of 2024. The latest survey shows U.S. stocks third quarter's earnings were intensive. The investors also analyzed a batch of latest results on Thursday. The CEO of Tesla, Elon Musk, also warned that while it is electric truck, the Cybertruck has been in production for more than a year, and it won't generate much positive cash flow, which further decreased investors' confidence in Tesla when it has missed its earnings and revenue in its fiscal third quarter. We can see that the Tesla's price adjustment policy that has been continuing since the beginning of this year and the last year is decreasing the profit margin for Tesla, and people should start to be consistent with the expectation that the recession is coming. And the shares of streaming giant Netflix beat its fiscal third quarter's earnings expectations, driven by strong growth in subscribers to advertising content. The Labor Department reported that the initial jobless claims for the week ended October 14th were 198,000, compared with 212,000 expected and 209,000 previously. In recent weeks, initial unemployment claims have hovered around the lowest level of the year, highlighting that the labor market continues to ignore economists' forecasts. Demand for manpower remains strong, and the jobs in all industries are growing steadily. Looking ahead, a month-long strike by the Auto Workers Union against the top three major automakers could lead to an increase in the first claims for unemployment benefits. While these workers may also decrease further strikes in these workers may also decrease the performance for these auto manufacturers. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.